Welcome to today's session. This is financial management, and we are going to look at this great topic of introduction to capital structure decision. So, class, anytime you hear of the capital structure, we mean, or we say that capital structure of a certain company or organization is made up of several sources or several components. Some of the components are like ordinary share, we can have debenture, we can have preference share, and maybe sometimes you can incorporate what? Reserve. So we have those main four of say ordinary share, reserves. You can have the preference share and also the debenture. So the capital structure is made up of the four components. We call them the sources of what? The capital structure, sources of the capital structure. And therefore, examiner will require you to analyze the capital structure of a company. You will be told to maybe find the WACC, weighted average cost of capital, WMCC, weighted marginal cost of capital. But before you analyze or before you get those cost of capital, you are required to have the knowledge of how to get the component cost. So if we talk about the component cost, we are talking about the cost of equity, famous known as the KE, the cost of equity. This is the capital structure. Introduction. So when you talk about the component cost, remember, you're just reviewing, revising. So component cost class, we have the first one as the cost of capital or cost of equity. Let's just call it cost of equity. And this one is stabilized as the KE. Then we have number two, cost of preference share. Just reminding ourselves, cost of preference shares. And this one is stabilized as a KP. Then we have number three, the cost of debt, which is stabilized as KD. So class, important to you is to know how to compute the component cost, to know how to come up with the component cost. Once you know how to come up with the component cost, together with the weight, remember, we will also be required to come up with the weight of these sources. You will be required to come up with the weight of these sources. So the weight of these sources, for instance, assume that you got your component cost or cost of equity, and you got the weight of equity. To get the WACC or WMCC, which is the main thing here, WACC will be given by that cost of equity multiplied by weight of equity. You add the cost of preference share, you multiply by weight of preference share, then you add the cost of debt, you multiply by what? The weight of debt. So you will be required to have the three. This is in the case of what? This is in the case of computing WACC, weighted average cost of capital. So the main goal for us is to arrive to this. So the first thing you need to, first of all, get the component cost. After you get the component cost, it's possible for you to now get the weighted average cost of capital, which is the result of any question that will be given by the exam. That is part one. Part two, the examiner may require you to get the weighted marginal cost of what? Cost of capital. Weighted marginal cost of capital. Class, remember, under the weighted average cost of capital, there are those items that we ignore. For example, retained earning. It is ignored when computing the weighted average cost of capital. Do not include retained earning when computing what? The weighted average cost of capital. Why? Remember, we have ordinary share and the retained earning, as the sources of finance, and therefore, under weighted average cost of capital, we prefer using the ordinary share. And ignore reserve or the retained earning. But that is now utilized when it comes to the weighted marginal what? Cost of capital. So even if the question have the reserves or the retained earning, kindly don't even compute the cost of that retained earning. Don't compute the cost of that retained earning. Maybe to take you back and to remind you, I think that's what we said. There's something we said in a certain lesson, regarding when examiner has given you the payout ratio. And now they want you to get the growth. Remember, growth is required for you to get the KE. If I remind you the formula of getting KE, today I don't want us to focus on the WMCC. So class, I know you know how to get the KE. Who can give me maybe a letter by letter? It will be simple for us to get it. I need to change my pen here. Remind me. You see this? So how do I get my cost of equity? In fact, under ordinary share. Let's be very specific here. Cost of equity under ordinary share nitapata namna gani? I want you to give me a letter by letter. That will be simple, rather than typing the whole of it. Remember, we are revising, we're trying to remind ourselves these things are good. Thank you. We start with the DO into bracket 1 plus G. And then I know I should divide with something. What should I divide with? Let me see. Remind yourself, make sure that these things are at your fingertips. You divide by the PO. You can less what? You can less the flotation cost, if any, or you can less as well the discount, if any, and then you add what? Your growth. Class. Examiner is a very, I don't know how I can say the examiner is, but he will give you a question where G is not provided. Remember, G in this case represent the growth rate. Taka tujikumbushe before we get into a question. So if the examiner has not given you the growth rate, how are you going to get your component cost? And if you don't get that, remember, this will be far from you. Getting the weighted average cost of capital, it will be far from you. Why? Because we are waiting for that KE in order to multiply by the weight, and then we get what? We get our WAC. So the moment you are not able to get the G, it will become difficult for you to solve this question well. So in that case where the examiner has not given you growth rate, examiner will give you some information that will guide you to get the growth rate. Examiner will give you information that will guide you to get the growth rate. For example, examiner can give you current dividend and previous dividend or past dividend. We call them current dividend or past dividend. Examiner is a part here, whereby you'll be required now to take current dividend divided by the previous dividend or past dividend, whatever that you get, you square end root of that. After that, you less what? You are what? You are 1. You less 1. That is about the growth. Examiner, on the other hand, can give you the dividend payout ratio. Dividend payout ratio. So in the instances where the examiner has given you the dividend payout ratio, we say that G is given by B times retention ratio. You see? B times retention ratio. How do we get B? Remember, B is our loan, return on equity. And then is the retention ratio. So in that instance, you are going to get your growth. So how do you arrive to your retention ratio? If you're given the payout ratio, ratio or rate as maybe you can say 70%. 70% is the dividend payout ratio. What will be the retention ratio? Let me get this from you. I want us to get this closer until we get to the point. What will be my retention ratio in that point? What will be my retention ratio? I want to mention somebody here. Mimi. Kuna mtu anajiita Mimi. Okay, sawa. Mimi anato okay. Everyone is saying 30% of 0.3. So in that case whereby already the retention the payout ratio is given, retention ratio is easily known. You can easily get that to know the retention ratio. And then you ask yourself, how do we get return on equity? How do we get return on equity? Somebody. I'm just reminding you this before we look at a question. In fact, I should be looking at one. How do we get return on equity? Remember, this is return to the shareholder. Tunapata namna gani? I have to share this question with you. Somebody, remember to make sure that you are participating. Don't fail to participate. Don't fail to participate in this lesson. How do we get ROI? Maybe to be precise, how do we get ROI? Remember, this is return on these shareholders. Tunapata namna gani? Allah, you want me to mention you? I don't want to mention you because I know you understand. Hapo nishapata. Robinson ananiambia profit after tax, and then you do what? You multiply by, you divide by shareholders' equity, okay, over capital times 100. Those are two responses. Good. To get ROI, we need to get the net income. Net income divide by what? The shareholders' equity. Shareholders' equity. Another thing arises, net income. How do we arrive to net income? Sasa hii ni rahisi. Net income. How do we get net income? Somebody? Net income. This is another thing that has arisen. Net income tunapata namna gani? I don't want to mention anyone here. Operating income less interest and tax. Okay, that is when you have the income statement items. Assume you are given EPS. Maybe examiner gave you earning per share. Maybe examiner give you earning per share. Let me share a question with you here now so that you can see the full picture of what we are trying to talk about here. Want to share this. So a minute as I share this question with you. Want to share this. And then Robinson, once I share this question, make sure that you can share it with it's failing me here. I don't know why. Oops. You people, do you have the past paper link? I wish that I could get this. Because it's failing me here. And when I share the past paper link, I don't know whether, I think I should first of all stop recording. All right. Sorry for that. Let's continue. So already we have 5,000 as our net income, and our shareholder equity is this. Shareholders equity is 20 million. That's the value there. So I divide by 20 million. So who can give me the ROI hapa? What is the ROI? ROI ni ngapi? Somebody? What about reserve? Bona Nuru Abubakar. Nuru Abubakar kuna mahali alipotea kidogo. Remember what we said, Nuru? We said that if you can look at what they want us to get, we want to get weighted average cost of capital. We want to get weighted average cost of capital. So in that case, we ignore what? We ignore our reserve. So yeah, we ignore reserve. So people are giving me 0.25, 0.25, 0.25. So now we have our ROI and we have our what? This is equivalent to 0.6. So our ROI is 0.25. So I can get a growth rate. The growth rate will be 0.25 times 0.6. That will be what is our growth now. Once we get growth, we can now move to the normal number 2. Cost of equity share capital. Hata unaweza ona hapo wakupatie 0.15. So class, our growth rate as per that question is 0.15, which is equivalent to what Catherine is giving us here, which is what? Which is 15%. That is the first part. Please confirm whether we are together up to that point. Are we together up to that point? Are we together up to that point? Confirm whether we are together up to that point. There are very many formula involved here. Very many formula. So tell me whether we are together up to that point. Give me a signal of whether we are together up to that point. Move kidogo. Somebody wants to confirm whether we are together up to that point as we move to the next part. So are we together? Catherine confirming. Thank you so much. All right. Good. Now, class, let's move to the next part. Having gotten our growth, we can move to the Roman number 2. So for the Roman number 2 class, they want us to get the cost of this is the component cost of ordinary share capital. Cost of ordinary share capital. By the way, is there anyone who is joining us for the first time? Anyone? Joining us for the first time? Anyone? Maybe kuna lunch, you never know. KE class is what examiner wants us to have here. And I know that the formula of getting KE is given by this formula, the KE and the Audencia. So we have several, Abubakar, we have Mimi, na Mimi ndio jina lako kweli. We also have Walter, asanteni sana na karibuni sana. Mimi niko na Mimi, wewe. All right, karibuni sana, and don't hesitate to contact our customer care to get more info about our ongoing session. Don't hesitate to go on. At the tail end, I give you the phone number that will help you to reach our customer care. So class, in this juncture, I'm required to get the KE, and for my KE, I have information here which is hidden for me. For example, what is my DO? Do we have the DO? Who can give me the DO? Do we have the DO? I have G, I have PO. In this question, I don't have rotation, I don't have discount, but DO is hidden. Who can just guide me? How should I get, which formula should I apply to get the DO? Or what did the examiner give us to get the DO? This is the current dividend. How do we get the DO? Watu wetu wako wapi? Wale watu wa kutukumbusha DO tunapata namna gani? EPS times payout ratio na EPS times retention ratio. Watu wanatupatia EPS na payout na EPS na retention. Which is which among the two? Because you are correct, by the way. You are correct. It is EPS. EPS iko hapo. EPS times, is it times retention ratio or times payout ratio? Remember, we are looking at the current dividend paid. Sini payout ratio, payout. Sasa si retention yenye tumebaki nayo. So it's a payout ratio. Hapa examiner alikuwa hatari. alikuwa hatari zaidi. Hapa ilikuwa moto ya kuotea wapi? Mbali. Moto ya kuotea mbali, and the payout ratio was 0.4. So can you give me the DO? What is the DO? Yeah, Lulu, asante. Thank you. Thank you. So give me this. Give me this. Remember, we are together in this. So it's 2 shillings. Shilingi mbili. Dividend kwanza, by the way, hizi vitu kuna vile tu hata ukikompute inakwambia dividend ya shilingi 12 per share. Ala, hapana. So dividend haikwagi mingi sana, haiendagi juu sana. Sawa. So our dividend here, current dividend is 2 shillings. So now I have everything here. To get my KE class, I just have my 2 shillings, 1 plus 0.15 divide by what is our current our market price. Market price imepeanwa na it should for ordinary share. Wherever they are touching ordinary share, that is the current market price that we are using, 50. Asante. So divide by 50 plus 0.15, and that will give us what? That will give us our KE. What is our KE? What is our KE? All right. As I give our guest number, phone number ndio hii 0719 525,000. Alternatively 0793 555. If you contact those readers, they will be in a position to assist you accordingly. So people are getting 19.6%. Imagine we are done. Class, once we are through with that, they want us to get there. They want us to get the next part, which is Roman number 3. And this Roman number 3, it is the cost of debenture capital. Class, note, when examiner is talking about debenture, anytime debenture is mentioned, please note that we have 2 types of debenture, redeemable and irredeemable. We have 2 types of debenture, redeemable and irredeemable. And those 2 debenture, they have different formula. In computation. For example, if we are talking of a redeemable debenture, that is the debenture that have what? Maturity period. Redeemable debenture, it have maturity period. Irredeemable debenture, it does not have maturity period, and therefore its formula is different from that of redeemable. For example, if I talk of a redeemable debenture, the one that has maturity period, we take the YTM, or yield to maturity, times, or you adjust that for tax. Yield to maturity, you adjust that for tax. For the other one, the one that does not have a maturity period, we take the interest, divide them by the market price, and then you do what? You adjust for tax. Now, I want you just to humbly tell me, our debenture in the given question, is it redeemable or irredeemable? Is it redeemable or irredeemable? Angalia tu information talking about additional information. Niambie, redeemable or irredeemable? Taka tuelewane. Additional information number 4. The existing 10% debenture is currently trading at 110 of par at the Security Exchange. Have they mentioned any period? No, they have not mentioned any period of this debenture, and therefore you are correct. You are all correct. So you can dance, you can appreciate yourself. Don't wait for people to appreciate you. You can't appreciate yourself now. Because you are correct. So class, in this case, when it comes to the irredeemable debenture, cost of debenture, of course, is 10% debenture. It will become easier because we know that the KD will be given by the interest divided by the PO, and then you adjust for tax, 1 minus T. That is the formula. Maybe to touch on the Other one, redeemable debenture, the KD of redeemable, it's given by YTM, and then you adjust that for what? For tax. Class, please note this. Please note this. YTM, which stand for yield to maturity, its formula is given by this. Yield to maturity, you get interest plus 1/n par value minus market value, and then this one you divide by what? A half of par value plus market value. This is very important formula. You see now n here is its presence is found in number of periods. So for the KD for the redeemable debenture, this will be the formula, and then now that one, whatever that you get, you adjust for tax. So in our case here, it's a 10% debenture. 10% debenture. So it will be KD will be simple 10% of par. Remember, you're looking at this at par. So what is the par value of our debenture? What is the par value of our debenture? What is the par value of our debenture? I want to see whether people are able to look at it. This is who? Nulu Abu Bakar. I like what Nulu is telling me. Yes, the par value is 100. So 10% of 100 divide by, remember that will give me interest. 10% of 100 is interest, the interest hapo. Then divide by the market price. Market price ni ngapi? Current market price. Market price ni ngapi? Just check additional information. They have told you it is 110% of par. You see, 110% of par, which will give you what? 110, and then you adjust for tax, which you were told is 30%. So can you give me the KD? Can you give me the KD? Can you give me the KD? People are getting a KD of what? 6.63, 6.4%, 6.4%. So class, imagine by doing that, you are printing some marks there. I hope you can see, you are just printing marks there. Already, we have 5 marks. Already, have 5 marks. And then we proceed to the KP. So class, I want to give you some work. I have 2 minutes here. I want to give you some work here. Maybe before we end our session. And for those who have joined us for the first time, remember at RCM we have two sessions for the 2 units that are critical. To us. This is financial reporting and financial management. These 2 units, you know the weight that they carry. You understand the weight they carry. So we have a morning session, and evening session. Remember, we have morning session. This starts from 5 a.m. like tomorrow in the morning, 5 a.m. tunapatana to 7 a.m. So if you wish to join us, you can just organize and contact our customer care through these numbers: 0793 555,000. Or if you find that this number is busy, you can contact this other number, and they will be in a position to guide you accordingly. Remember each session. If you're retaking, we have lowered the price, the fee. Just pay 3,000 for the remaining part of the semester until you do your exam. 3,000. So for the regular fee, now it's not 4,800, it's just 4,000. If you're not retaking and you wish to join us, just pay that amount of money. Or pay bill, or the pay bill for the school is 839, and account number, you can put the unit name. Do you want to do company? Do you want to do PFT? Maybe block revision is how much, Marim? So this is Walter who is asking about the block revision. So what I assure you, if you join us as per now, you will even do the block with us with that amount. That is assured. Yes, as per now. So I think you can take this advantage of the offer. Yeah. KP is 8%. KP. Oh, already, this is Robinson. Robinson has gone ahead and computed the KP. I wanted to give you that as assignment. You, Robinson, you are leaking the exam. You are leaking the exam. Robinson, you are leaking the exam. So I think now, class, you need to go and practice. Go and find the KP. No worries, no worries, no worries. I just understand. I understand. So go and look at for the KP. Go and look for the KP. KP. Remember how we get the KP? You got 6.4. You see. Also, you need now to compare. Now I can see. That is very good now. At least Nuru umekuja kutuokolea hapa. Pia mimi washa confirm tena. Mimi Catherine naye All right, sasa the others including Robinson now. Robinson, you have a counter. You have a counter there. You had drawn one. Now they have drawn two. Now I don't know what you are going to do. So you have to go back to the drawing board. You have to go down back to the drawing board so that at least you are able to come into conclusion, which is, but I can see the two and the different location in this country. I think they cannot fail to be correct. They cannot fail to be correct. So class, I think it's time. You can see it's already 2:02. I know there are those who are going back to work. There are those who are keeping safe, and I wish to maybe stop at that point unless there is a burning question. Unless there's a burning question. So I can see even Mimi, wewe Mimi amepata 6.4. So and now from that point, class, what you'll be required to do is to find the component cost. Now, not component cost, but the weight of the component cost, weight or proportions of the component cost. Once you get the proportions, you'll be able to get the WACC. So class, I think we can end our session at that point. It has been a great time with you. I really appreciate your presence. It is not in vain. How are you calculating? I'm getting different figures. So Shiro amepata a different figure. I think we can do that together. For the sake of those people who are getting a different figure, allow us to do that alone. Then for the rest, class, you're going to do what? You are going to. So I know what I need here. I need the power value. What is the power value for the preference share? I need the power value. Power value ni ngapi? Nipatie ni power value as we wind it. Power value of the preference share. 20. What is the rate of preference share? Preference dividend? Preference dividend is 8%. So rate ni 8%. And then give me the market price. So I know that KP is equal to preference dividend over the market price. That is 8%. 8% times 20 divided by market price ni ngapi? 25. So is this giving people 6.4 or inawapatia namna gani? So Shiro Robinson, can you now confirm whether you're getting 6.4? Please confirm whether you're getting 6.4. So 8% of 20 divided by that. Great. 6.4%. 6.4%. Good. So Shiro, I hope now you're okay. So from that point, you go and get the weight. Once you get the weight, it will be good. Be very, very good. So class, allow us to end at that point. If times allow, once we meet again, we shall be able to complete that. Otherwise, I want to wish everyone a happy afternoon, a happy and a peaceful afternoon. Goodbye. Let's meet tomorrow if we must. All right. Goodbye. Asante.